If you've ever run your accounts receivable report in QuickBooks and seen a balance on there that just doesn't quite seem right, either because you're pretty sure the client paid or you distinctly remember receiving that payment yourself, you're definitely not alone, and this video is for you. So today we're going to go ahead and walk through how we discover whether or not a client's invoice is still outstanding on the books, even if they've already paid, how to confirm that they've already paid that invoice, and finally, how to resolve the difference so that we're not overstating our income and so that our outstanding accounts receivable is complete and accurate. So let's go ahead and start by going to our accounts receivable aging summary, which we can find by going to reports from the left-hand navigation menu here and selecting standard reports. Now, I happen to have accounts receivable and accounts payable aging summaries up in my favorites section already, but if you didn't have those, you would want to go down to the Who Owes You section of your reports, which is the third one down, and you would want to select accounts receivable aging summary. Now, this is, in theory, a summary of everything that is currently owed to you. But like I said, there are sometimes some things that can happen on our books that make this report inaccurate. So for this example today, I'm looking at my accounts receivable report and I see an amount in the 61 to 90 day aging period. Okay. Now, to be quite clear, as a general rule, something being in the 61 to 90 day aging period is not automatically a reason to worry, right? But what would be a reason to worry is if I was thinking about it and looking at my reports and going, gosh, I really think that Brian Chen actually paid that invoice. So what happened here, right? Well, if I was confident that Brian Chen had actually paid this invoice, my next step to troubleshoot what happened would actually be to go into either one of two places, my bank register, to look and see if I could find the payment that Brian Chen had made that was recorded into my bank account. Now, this would be fine if we knew for sure that Brian Chen had made a payment and that was the only thing we deposited that day. But if we're not sure if maybe it was lumped in with another payment, or we're not 100% sure of the date that Brian Chen made the payment to this invoice, we would actually want to go into his customer profile to look into this further. Okay, so from here, what we would want to do is go over to All Apps and then go to Customer Hub and into Customers and Leads. So now we would want to go into Brian Chen. Now what we see here is we can see that he has an open balance of $1,225, which based on what I saw in the accounts receivable report is exactly what I would expect to see here. But let's go ahead and drill into this and see if we can figure out any other data. So if I click on his name or anywhere in that line, I'm going to be brought into his customer profile. And we can see if we scroll down just a touch, we have this invoice right here, which is what is currently causing there to be an accounts receivable balance on the books. But we can see he did actually make a payment on May 11th for $1,225. So a couple things here. I do want to say, first and foremost, just because the payment dollar amount matches up and it happens to be in roughly the same time period does not in all situations mean that this payment should have been applied to this invoice, okay? If you have a recurring invoice that is going out to clients or an amount that is commonly billed, we can't always assume that a particular payment for a particular dollar amount should be tied to an open invoice, right? Sometimes if we have recurring monthly invoices going out for the same amount every single month, people will accidentally pay them out of order or something else will be happening, right? But if in this instance we can see he's usually billed variable amounts and this payment was received during the window when this invoice was due. Based on those two facts, I could theoretically make a pretty educated guess that this was a payment for this invoice. But I would want to go a little bit further before I make that determination and before I decide to move forward with any corrections, okay? So I would actually want to go and look at this payment and see how that payment had been applied, right? Because if it turns out that this deposit is supposed to be associated with another invoice, or if there's additional detail in there, maybe it is not supposed to clear this invoice out. So if I go to view edit here, I can see this was a deposit that came in. It has been matched in my bank, which means that it's already been tied with something that came through on my bank transactions tab. And it is being classified to bookkeeping services. Okay. Now, at this point, I've kind of done my due diligence to know that this truly is a duplicate transaction, but I do want to say this is a sample file, right? I am literally sitting here creating examples that meet certain criteria. So your level of due diligence in your business is possibly going to be a bit higher, right? It might involve reviewing customers' payments over multiple months. It might be a matter of going in and looking at your invoices in the history. It might even be a matter of reaching out to that customer and confirming where they had intended their payments to be applied, especially if you do have a situation where their invoices for the same dollar amount month after month after month, okay? So for the purposes of this example, though, I happen to know that this payment was supposed to be applied against this open invoice, and the wires just got crossed somewhere, right? This can happen if we don't match a transaction in the bank transactions tab instead of just classifying it, right? So what are the steps to correct this once I have established that this is in fact a duplicate? Well, a couple of things here. I want to show you how this is actually showing up on our profit and loss and balance sheet report before I make any corrections, so you can see why this is something that needs to be rectified in the first place. Okay, so let's go ahead and go to our profit and loss report. Now, if you are working on a cash basis, at this point, your income is actually not duplicated. And that is because cash basis accounting is all about when money actually changes hands. So it's not showing what we sent out as an invoice as part of our income. But let's look at what happens on accrual basis, okay? I am going to filter this report down just a little bit because we're only dealing with a brief window of time. I'm going to say from 4/25 of earlier this year to 5/15, okay? And then let's go ahead and look at the bookkeeping services income here. Now, again, because we are on accrual basis, we are not only taking into account any deposits that were received that were classified as bookkeeping services, but we are also taking into account any invoices that were sent out, regardless of whether or not payment was received. And as a result, what we see here is we see that open invoice from Brian Chen counting towards our income amount, and the deposit that we received from him also counting towards our income, which means on accrual basis, we have duplicated this income, okay? Now let's go ahead and toggle over to cash, and I'll show you what I mean when I say that on cash, our income is not duplicated at this point. If I select cash, we're going to see that only invoices where the payment has been received and actual deposits that we've received are being counted. So here, on cash basis, that income is only being reported once, okay? Now, if you're on cash basis accounting at this point, you might be thinking, well, gosh, do I even need to make an adjustment to my accounts receivable reports, or do I need to mark that invoice as paid at all? And the answer is ultimately yes. Even if you're not on accrual basis accounting, you still want your accounts receivable reports to be complete and accurate. That includes making sure that any invoices that are outstanding are marked as paid appropriately. Now, there is some debate whether or not you could just theoretically edit the invoice to have a $0 amount, therefore clearing it out of AR. You could also theoretically, if your client wasn't relying on that documentation, just void the invoice, right? But as a general rule, once you've sent an invoice out to a client, that's not only part of your own documentation for your business, it's part of theirs too. So you don't want to delete an invoice that you've sent to a client, because ultimately that's going to delete the invoice for them too. They will no longer be able to go into their email and pull up a copy of your invoice for their own records. And that's really unfortunate, and it can kind of mess with everybody's system at the end of the day. So ultimately, what do we want to do in this situation to make sure that our books are accurate and that we're not doing anything that possibly messes with our clients' books and their records of what they're paying to us either? Well, we have to do a couple things here. First, we have to mark this invoice as paid, and we actually have to basically reduce our income account by that amount as well. Okay, so how are we going to do this? Plain and simple, what we're going to do first is we're going to mark this open invoice as paid, and we're going to do that basically the same way we usually would. So I'm going to go up here to the plus create button, and I'm going to say receive payment. I am then going to select Brian Chen as the customer. And we can see this is the only open amount that we have for him. I'm going to mark this invoice. I'm going to make the date the same date as the date he actually sent the payment, which, as you might remember, was on the 11th of May. Now, here is where basically the overall tact that you can take can vary. As a general rule, I don't like to deposit a correction into my checking account, okay? You absolutely can do that, and you can do a subsequent journal entry against your checking account to clear it out. However, I tend to like to put corrections like this to some kind of clearing account, whether that be undeposited funds or any other clearing account that I have on my books, okay? And the reason for this is quite simple. If my checking account is already reconciling and if the balance on my register is already matching my statement, I don't want to do anything to possibly mess that up. But I do want to make my other reports accurate. So what I'm going to do here, instead of depositing this into my business checking account, I could do a couple different things. I could either put it into undeposited funds, or if I wanted to really call it out as something totally separate, I could actually put it to cash, okay? Now, basically what we're going to do is this is going to cause our cash balance on the books to increase by $1,225. Then what we're going to do is we're going to adjust that down. And basically, the other side of that transaction that we're going to hit is going to be our bookkeeping services account so that that gets reduced by that same amount. So we'll go ahead and hit record and close here. Now, you can see what this does not change the amount that was sitting in our open invoices or in our accounts receivable during this period of time, because on accrual basis, we have already counted this money, right? But we are also still counting this deposit at this point, okay? So let's go ahead and look at how we handle the other side of that correction. But first, really quickly, let's take a look at our accounts receivable report to see what has actually happened there at this point. So since we have received that payment from Brian Chen and put it to that cash account, we now have nothing sitting in our 61 to 90 aging bucket, which is exactly what we would expect to see, okay? Now, if I go into my chart of accounts, what I'm going to see is that in this cash account, I now have $1,225 that I actually know I don't have because this is basically just a duplicate transaction. So if I go into the register here, I have a couple options. Either I can record an expense basically going out of this account for this amount, which will effectively be recorded as a journal entry on the books, right? Or I can actually create a journal entry. Now, for ease, I am going to go ahead and just create an expense transaction in this register and put it against bookkeeping services, because then I don't have to worry about whether or not I am debiting or crediting the correct account. Okay, it just makes life a little bit easier. Now, in the future, I will be doing videos about journal entries specifically and how we use those to fix things on our books. But because those are a higher level item and because they can have rippling effects on our books, I don't want to go into that just now. Now, one other caution, and I apologize, I should have said this earlier. Because I am doing all of these corrections in current year, this is absolutely fine and completely acceptable. But if this were an outstanding transaction that fell in a prior year or in a prior accounting period, so if you're on a calendar year for your business or a fiscal year, either way, if it falls into the previous year, you want to confirm with your accountant, your EA, your CPA, whoever is doing your tax returns, to make sure that whatever you're doing here is not going to mess with what they have already reported. Okay, that is a critically important step. But since this is all in current year, and because I know that the taxes for 2026 have not been filed yet, of course, I am okay to make these edits. All right. So from here, I can go ahead and say add a new expense. And I'm going to go ahead and put the same date as the deposit. And I'm going to go ahead and leave the payee blank for this. I'm going to put $1,225 in the amount. And for the account, I'm going to put bookkeeping services income, okay? When I hit save on this transaction, it is going to update this register balance to 0, okay? And now what we can do is we can go and look at our reports to see how all of this is actually shaking out. Okay, so if I go back over here to reports and then standard reports, back into our profit and loss, and then again filter it back down by that period of time. Whoops. Now we can see bookkeeping services has come down a little bit. So let's drill into that and look at how that is happening. So we have our accounts receivable amount from Brian Chen coming in, and it is being recognized when the invoice was sent, which is what happens on accrual basis accounting. And now we're showing this deposit, but we're also showing an outgoing amount to cash, okay? So that now means that my income account is correct. And as we saw before, my accounts receivable report is correct as well, because that outstanding invoice that was showing at the very beginning of the video is no longer showing as outstanding. Now, this is something, again, that can have wide-reaching implications. So I very much recommend caution when it comes to going through this process, okay? Ultimately, there are lots of double checks that were built into this system. For example, when I put the money that I was receiving against that invoice into cash, that was kind of a red flag to me, because I know that I don't keep cash on hand in this particular business, right? So if ultimately I'm looking at the reports down the line and I see an amount in cash, that's going to indicate to me that I had a second step of a process that I was working on that I had not completed. Okay, so I highly recommend that you be aware of how this is all shaking out and impacting your books. But do know that this is an option that is available to you to resolve issues that are happening on your reports. If you have any questions, please feel free to leave those in the comments below. I absolutely will get to answering all of them. I'm Holly from Accrual, Mistress Bookkeeping and Consulting. I hope you found this helpful.